Welcome to the Sykes & Company PA video blog.
Well, the answer to that question is yes. Basically, everyone needs tax planning. Recently, the IRS encouraged everyone to have a tax plan. A lot of people might not realize it, but at the beginning of the year, when you get a new job and you fill out a W-4, in essence, you're tax planning from then, figuring out how much there's going to be withheld or how much you decide not to withhold. Either way, that's going to impact the amount that's due come April of the following year. So that in essence is a tax plan, very simplified. And especially if you have businesses or new dependents or investments or you sell something, all of that needs to be taken into consideration with the amount that you've paid in to the government, and if you feel comfortable paying a tax or if you look forward to having a refund. So everybody needs a tax plan.
You want to be proactive with tax filing. You don't want to be reactive. So we hear a lot of pharmacy owners out there say they get the call on April 15th from their CPAs and say, oh, by the way, you owe $100,000 tomorrow to the IRS, to the Treasury, and you need to write that check today. So, tax planning is not that. Tax planning is looking ahead, being proactive, making projections, putting strategies in place, and adjusting as necessary to the different changes, the different variables that arise throughout the year, and then putting that plan into action. And so come April 15th, you're in a refund situation, what your tax liability may be if that's what you're planning for, planning around, etc. So that is really what tax planning is, just being proactive and planning ahead.
2020 has been a big year in so many different things. We have the different HHS payments that were made in 2020. You have the different government funding to support the employees with the Paycheck Protection Plan. And all of these things, some of them have not even been solidified with the IRS. How is it going to be treated for tax purposes? So for right now, it's so important before the year is over with to get an idea of what are the taxable items, how they will be treated. And then even if you might think, I just have a loss, you have to know, are you able to take those losses in the current year? So it's going to be a year like no other to really analyze what your situation is like, considering all the variables and changes of 2020.
So in addition to what Kendell just mentioned, I think cash flow is really a big driver as well. And, with cash as tight as it is in pharmacy, and we all know cash is king in a pharmacy, if you're tax planning and you're doing the right things from that perspective and being proactive there, you're really planning for that cash flow, and that's extremely important in a pharmacy. And so that reason alone is a big motivation to get out there and start planning for some taxes.
And I would be remiss if I didn't add about the Tax Cuts and Jobs Act has allowed small businesses to make the adjustment from accrual to cash. And that has caused significant tax savings with pharmacies that we work with. However, that's not an adjustment that will necessarily benefit every pharmacy in the current year. So make sure that whoever your accountant is aware of that adjustment from accrual to cash and is able to look at things such as your basis, your profit, your receivables, your payables. Those things are up to date to be able to estimate how big of an adjustment and how big of a tax advantage you will get from that. The first thing we're going to ask for is up-to-date financial statements. So if your financial statements aren't there or they're inaccurate, there's a lot of adjustments that haven't been made since the last year, it's really impossible to tell or to plan for anything. And as we're monitoring your income throughout the whole year for our clients, towards the engagement starts around October to November, where we hash out the finer details see if they need to purchase additional equipment, or discuss different retirement strategies to prepare themselves for retirement depending on their age, how much they want to put in. So the engagement and the fine-tooth details is usually around October, November, but it's something that we're monitoring year-round.
Well, I can tell you that just because maybe you own one pharmacy, maybe you're not as profitable as you think, and you may not need tax planning. Tax planning is still very important for everybody, because it's $10, $20, $30,000, strategy sessions with these tax plans can save you a good chunk of money come April 15th, even if you're running losses, even if you're profitable by a small degree. So, there's a lot you can do no matter what size income or losses you're faced with. You can do some extra planning there to maybe get some refunds back to offset taxes you've been withholding through your W-2 or something like that. So, retirement plan strategies, basis strategies to absorb losses or offset other income. You've got qualified business income strategies, payroll strategies with how much you're paying yourself and how you maybe plan around that with the qualified business income. So there's a whole myriad of options out there, but it really is for everybody. Don't think just because you maybe not be in a very profitable situation or in a loss situation that it really doesn't apply to you. You can maximize your situations in a lot of those cases with the proper planning.
Thank you for watching. If you enjoyed the video, we invite you to subscribe to our YouTube channel.